The Starbucks CEO went on national TV and told you to accept a $9 coffee, but nobody can afford it, and they know it. And they are deliberately wrecking the average American's budget. Here's what smart people are doing to dodge corporate price gouging.
Last week, Brian Niccol, the CEO of Starbucks, who made $97.8 million last year, went on the Wall Street Journal and defended a $9 cup of coffee. He called it an affordable premium experience. When the host asked him about the K-shaped economy, he said Starbucks doesn't see it. Most coverage stopped there. The CEO is out of touch. People are mad. Move on. That's the surface story. There's a bigger story underneath. The $9 coffee isn't the story. It's the indicator. The CEO of one of the largest consumer brands in America just told you on a national platform that a working family's daily routine is now a luxury. That's not a gaffe. That's a signal. And what the signal points to is a long line of dominoes already falling. Independent coffee shops closing, micro roasters going bankrupt, community cafes shutting down, neighborhood culture being replaced by corporate lookalikes. All while the chain raising its prices reports it as a turnaround. By the end of this video, you'll see the dominoes. You'll see who actually pays the price for this. And you'll see what the $9 cup is really telling you about where America is going next. Niccol said it on the Wall Street Journal's What's News AM podcast on May 1st, 2026. The full quote, "In some cases, a $9 experience does feel like you're splurging. And then what that means is we have to make it worthwhile. And then in other cases, certain people believe, well, this is a really affordable premium experience because they're saying like, well, it's less than $10 and I get a really premium experience." He literally describes two different customer types in the same answer. One for whom $9 is splurging, one for whom $9 is affordable premium. That's the K-shape in two sentences. Then when the host asks him directly, quote, "The K-shaped economy, fortunes for some Americans, very different than for others. Is that not really something coming up in your sales?" Niccol says, quote, "We're not seeing that in our business. Both can be true. He can see two customer types in the store. He just doesn't see the third, the one who left." The financial reality. Starbucks Q2 fiscal 2026 reported April 28th. Global comparable sales up 6.2%. North American comp sales up 7.1%. Revenue $9.5 billion, up 9%. Adjusted EPS 50 cents, up 22% and crushing the 43-cent Wall Street estimate. Stock up about 24% year to date. Niccol called it the turn in the turnaround. Niccol isn't lying about the numbers. The numbers are real. What's missing from the numbers is what makes the story. Here's what the press coverage is leaving out. Q1 fiscal 2025, the quarter ending December 2024. U.S. comparable transactions down 8%. Same-store sales down 4%. Operating income down 22%. Q2 fiscal 2025, U.S. transactions down 4%. Q3 and Q4 fiscal 2025, North American transactions still negative. 5 straight quarters of declining customer visits. Placer AI, the foot traffic data company, confirmed Starbucks foot traffic declined nearly every month from January 2024 through August 2025. 20 months of declining traffic. Per location visits dropped 5.4% in August 2025 alone. Starbucks underperformed Dunkin' and Dutch Bros in all but 3 months during that entire stretch. In September 2025, Niccol announced the company would close 100 to 150 stores. He laid off another 900 corporate workers. Earlier in the year, 1,100 more had been let go. Total 2025 layoffs at Starbucks corporate, 2,000 workers. Then, Q2 fiscal 2026, comp sales up 7.1%, average ticket up 2.3%. That's not a turnaround. That's the math result of losing 8% of your customers and keeping the ones who can pay more. The Back to Starbucks strategy worked on the customers who stayed. The customers who left at $5 and $7 and $8 are gone. They're not coming back. The coffee they used to buy at Starbucks is being made at home now, or bought at a gas station, or skipped entirely. When Nico says he's not seeing the K-shape in his business, he's right. The K already finished sorting his customers. The bottom half left, the top half stayed. The numbers look great because they're only counting the top half. Now here's the part nobody is connecting to the Starbucks story.
Hey everyone, real quick, sorry to jump in. I've got that sale running, 4 courses on real estate cycles. It's the real estate cycles course, the home seller pro course, the real estate bear market course, and a surprise course. 4 courses for, I think it's $49. It's insane. It'll change the way that you think about preparing for this real estate downturn, how to take advantage of it and make a ton of money. Now let's get back to the video.
While Starbucks closes 150 stores and reports a turnaround, the independent coffee scene that defined the last 2 decades of American coffee culture is in collapse. January 2026, Compass Coffee files for Chapter 11 bankruptcy. 25 locations across DC, Maryland, Virginia. The founder said in the filing, quote, "Foot traffic downtown has not returned, work patterns are different, and the economics of running urban cafes look very different than they did even a few years ago." After filing, Compass closed 10 locations. British coffee chain Nero bought the brand and assets out of bankruptcy for $2.9 million. November 2025, Red Bay Coffee, an Oakland-based artisanal roaster known for direct trade practices, closed its 3-story flagship after only 5 years. The lease ran out. They couldn't renew. The Blend Coffee and Cocktails, 8 locations in Florida, Chapter 11, November 2025. Switchback Coffee Roasters, award-winning Colorado Springs roaster operating since 2010, Chapter 11, August 2024. Ritual Coffee Roasters, 20-year-old San Francisco institution, closed its Haight-Ashbury location April 2025. Philz Coffee closed its SF headquarters and was acquired by private equity in 2025. This isn't a list of failures. This is the spine of the American specialty coffee scene snapping vertebra by vertebra. The mechanism. The same coffee retail price inflation that pushed Starbucks customers out the door is breaking the independent shops too. But worse, a 47% 5-year increase in retail coffee prices. Wholesale costs the independents can't absorb the way Starbucks can. Starbucks has Q2 fiscal 2026 revenue of $9.5 billion. The local roaster has a lease, 2 baristas, and a 6-month runway. Then the rent itself. In San Francisco's Mission District, retail space for a small cafe runs over $10,000 a month. In Manhattan, more. In Seattle, where minimum wage is $19.97 an hour, labor costs are roughly double the federal minimum wage rate. Big chains can spread those costs over a national footprint. Independents can't. And then the marketing. Nickel announced in January 2026 that Starbucks would double its marketing spend as a percentage of revenue. The independent down the block has 0 national advertising budget. Here's where the story actually lands. The household making $50,000 a year that used Starbucks as the 10-minute morning escape, they didn't get richer. The price math broke. They drink homebrew now. The bag of coffee at the grocery store costs $20, where it used to cost $12. The retiree on Social Security lost the social part of the routine. The regulars, the barista who knew their order, the morning ritual. The 2,000 corporate Starbucks workers laid off in 2025, most salaried with families and mortgages. The same K-shape that sorted the customer base ate the workforce. The CEO defending $9 coffee made $97.8 million while 2,000 of his colleagues lost their jobs. He took home in one day about $268,000, what most of his customers make in 5 years. The independent coffee shop owner who built a community business over a decade. The Compass Coffee founder. The Red Bay founder. The local farmers who sold beans to that roaster. They lose a customer relationship that took years to build. Here's who this helps. Nickel himself. $97.8 million in 2025. Stock up 24% year to date. The quote-unquote turn in the turnaround delivers the board narrative that justifies his compensation. Wall Street shareholders. The math works on the customers who remain. The stock recovers. The pension fund index that owns Starbucks reports gains. The private equity firms buying up the wreckage. Philz, acquired by PE in 2025. Narrow Coffee picking up Compass for $2.9 million. The brand and the locations get bought at the bottom of the cycle. The remaining customer who experiences Starbucks as an affordable premium experience. The line is shorter, the seats are better, the service is faster. The whole experience improved when the volume customer left. The geography of the problem maps onto the rest of the unaffordability data. Seattle, SF, NYC, LA, every one of these cities is also at the top of cost of living rankings. The $9 coffee is the inevitable result of every cost rising at once. The cheapest coffee, Harrisburg, Kissimmee, Des Moines, cities where rent is reasonable, wages are lower, and the cost structure of running a small shop still works. The American economy is no longer set up to make working people prosperous. It's set up to extract from them. CEO pay rose 20 times faster than worker wages between 2024 and 2025. CEO compensation grew 1,094% since 1978. Worker pay grew 26% in the same period. Worker productivity grew 80%. Workers produced 80% more output over 50 years and got a 26% raise. The CEO to worker pay ratio is 285 to 1. The median worker would have to start working in the year 1740 to earn what the average CEO made last year. Corporate profits tripled since 1980. MIT Sloan research documented that buyer consolidation alone explains 10% of all wage stagnation since the 70s. The bigger the buyer, the lower the supplier wages. Big buyers consolidate. Wages at their suppliers fall. The chain raises the price. What that produces over decades is a working population whose paycheck doesn't actually buy them a life anymore. They work full-time. They pay rent that takes a third of it. They drive a car that costs more to insure than they make in a week. They buy groceries that doubled. They pay for the streaming subscription that quietly went up, and they pay $9 for a coffee, or they don't, and they make it at home while the CEO who priced them out takes home another $250,000 that day. That's not a free citizen participating in a market. That's a worker whose entire wage is already spoken for before they earn it. The market isn't free. The price isn't a price, it's a transfer. The next time you see a corporate executive on television defending a price you can't afford, listen for the same language. Premium, affordable luxury. That's the language of the extraction. Once you hear it, you'll hear it everywhere. Economic Ninja is out.